You're watching The Property Show, and today we put the spotlight on two big trends to decode what they mean for India's housing market. First, the Reserve Bank of India on Wednesday raised the benchmark lending rate, also known as the repo rate, by 35 basis points. Now, it's important to note that this is the fifth increase since May 2022, and in all, RBI has raised benchmark rate by 2.25% since May. Now, home loan rates, which were 6.75%, have now shot up to 9%. What will be the impact on housing sales in India is what we will decipher. Also, on the show, what made news, the World Bank said India is expected to receive a record $100 billion in remittances in 2022, making it the top recipient this year, ahead of Mexico, China and Philippines. Now, we are also asking our experts, is some of this money flowing into real estate? And are NRIs or non-resident Indians buying more property? Abhishek Kapoor, CEO Purvankara, Mayur Shah, partner EY, and Vikas Vadhavan, Group CFO Housing.com, join us for the discussion. Abhishek, you have all the numbers, so I'm going to come to you. First, what's happening? I mean, sales across top 7 cities, including tier 2 cities, have been so strong that people were predicting that, we might actually end 2022 surpassing an all-time high of unit sales in 2014. But now we have interest rates going up and touching 9%. This is not a small increase, right? 2.25% in as short a period as 6 months. Are you feeling the tremors? Are you beginning to see the hesitancy amongst buyers?
So Manisha, actually not. I'll tell you why. Maybe because the interest rates were around 8.25, 8.5% prior to COVID, and what happened was then the interest rates really went down, and that triggered. But the business was still happening, right? So business continued to happen even at that time, and business continues to happen even today. I think the buoyancy is higher today because of the economic activity, and as we all know, India's growth rate is the highest in the world today. And investments across the world is coming into India, especially in the manufacturing sector. We are talking about government spending has gone up, private spending has gone up, investments from the private sector is going up. So overall, it's been a positive trend. And I think that buoyancy in real estate seems to be sustaining. We are not seeing it in the numbers at all at this point in time. And I think we will surpass the 2014 numbers.
Vikas, what's been your experience? I mean, if I also look at some job data, right? Now, we know that US continues to report very strong job data numbers despite recession. There is a lag before job market shrinks in economies like United States. In India, though, some tremors, 52 startups have laid off 17,000 employees. And I look at the larger picture and say, hey, this is not a big deal, but the mood is turning cautious amongst the largest group of young millennial buyers in India who come from IT sector. Do you think that the momentum will continue? There will be no short-term turbulence of this 9% home loan interest rate?
So, no, thanks, Manisha. And see, what is happening in the startup ecosystem right now is more of a reflection of what's happening in the Western world. If you look at the Western world, there are massive layoffs in the tech startup ecosystem. And that is, I'm not surprised or shocked with that because, there are two things. One is, are the fundamentals strong? And are people cutting on the core or fundamentals? That's not the case. In the startup ecosystem, yes, there are certain layoffs in India, which is much smaller as compared to the Western world. But those layoffs are focused on certain long-term projects, which whenever there is a tightening in the economic environment, people cut off those long-term projects, which does not have immediate impact on our financials or on our growth fundamentals. So that's what is happening in pockets. But otherwise, core and the fundamentals remain strong. We have seen that startup ecosystem is growing and growing very, very robustly. So that won't have any impact. But yes, these kind of layoffs always have some kind of a negative sentiment, and they may have some very minor impact on the overall real estate ecosystem. But on the RBI interest rate, I echo what Abhishek said, 9% or 8.5%, which is what the borrowing rate is on the mortgage side, will not have any negative impact on the market because right now the trends we are seeing, the property prices are going up. and property prices have started moving up after a long pause. So there, from a buyer's sentiment perspective, they want to catch the buzz while the property prices are still within their reach, rather than worry about their mortgage interest rate, which is typically a 20-year long
I think
borrowing.
because you've raised a very important point. You know, people buy more when they see actually prices going up. When prices are very flat, they're not enthused to buy. But that brings me to another question. I was going to take this point a little bit later in the discussion, but Abhishek, I'm going to pull it up right away. Now, JLL came out with its housing affordability index, and they said that, you know, between 2013 to 2021, literally affordability in India was going up because housing prices was flat and home loan interest rates were going down. But now 2022 is the first time that affordability index is dipping, and 2023 is also going to be hard on affordability. Again, not big news, but just playing the devil's advocate, at what level of interest rates do you believe that there could be some pullback in the buying demand?
So, you know, traditionally, Manisha, if you look at what the percentage of household income that goes, which is really goes into real estate, has always been somewhere between 52 and 55%. And one of the reports that were published up till March of this year uh, showed that the quantum of money going into real estate of household income is only 45%. What that means is there is a headroom of almost about 10% that's available over there in terms of people having not spent on homes. And of course, there has been an increase ever since in the salary levels, which was quite high. It was, in fact, for IT sector, services sector, it was above 20%. So I really don't think that there is any impact from that context at this point in time. And what we are seeing is pent-up demand. Fortunately, this is one product where the demand just gets deferred. It never expires. So people are back in the market, you are right, as the prices are going up. So, you know, really, I think interest rates, if at all it may have an impact, possibly it'll happen in the upper middle segment, and we'll have to wait and watch and see how that pans out. What I mean by that is, you know, if the price point of a product is sub 2 crores, 2.5 crores, the actual impact of EMI, which is up to say 1.5 crores on a 1.5 crore loan, which typically will not be more than, maybe if I add 150 rupees another for 1.5 crores, you're not talking about anything in excess of about 25,000 rupees a month, right? So that had, and if you compare that with the household income, that number is much larger in the sense that for a 1.5 crore loan, the household income will be anywhere between 3.5 lakhs to 4 lakh rupees. And if people who want to buy, because today's demand is not investor demand, this is all end user demand. Everybody is taking a loan. So in that sense, if you're an end user and you're seeing prices go up and you know that this is a good time to buy, you know that the interest cycle will play out. And at any point in time you buy, because over a home loan cycle of 15 to 20 years, people have really educated themselves that, you know,
And
interest
what
will go
goes
up
up
and down.
also comes down, isn't it? So I
Exactly.
think we can just hope for that best. But I'm glad to hear that, all right, we are likely to continue to see good days in housing demand, because we do know that India's GDP is quite closely related to how real estate performs. So let's move on to the remittances story, which also made big news. It seems, I mean, $100 billion, and also India being ahead of China is quite something to be positive about. But now, how much of it is coming into real estate is the big question. Because tell me, have NRIs come back into the market? Because so many of them really did burn their fingers with stuck projects, and they'd actually sworn off real estate in India.
Absolutely, Manisha. We've seen in the past as well, NRI segment is one large segment which continues to buy properties in India, either for their folks or parents who are back home in India, or even from investment perspective. So we saw there was a decline in NRI demand between 2016 to 2020. But what we are seeing or observing that NRI demand is coming back, and there are a couple of reasons for that. There was a lack of confidence in the market for certain reasons between that 2016 to 2020 period, which has come back. and that has come back on the back of RERA. People now, whatever projects are getting launched, they are all RERA approved. People have confidence in getting delivery of what they are buying, and that is where NRI who is far away from the home is comfortable investing because they have that assurance. Second big thing which has played out is a lot of consolidation has happened in the market over the last 2 3 years, where the bigger brands have a much wider presence in most of the bigger markets, and that is where when an NRI who's far away from the ground realities, they are happy putting in money on a big brand. And these are the two major reasons where NRI demand is coming back. In addition to, yes, property prices are going up and hence people want to catch the bus. So these are two reasons primarily driving NRI demand.
Okay. Abhishek, have you seen that shift? I mean, NRIs coming back, inquiries going up, actually turning into transactions. Because, you know, when it comes to NRIs buying in India, the dollar to the rupee plays an important part. And we've seen that rupees actually slid about 20% in the last 4-5 years. So yes, the dollar can buy more today, but there's also a question of, in case they want to repatriate that money, sometimes all the appreciation which happens in the domestic market is just lost in that dollar appreciation. So how do these two sentiments play out? So NRIs look at end buying of homes, or do they actually look at investments as well?
So let me start with the data point on what we are seeing in terms of NRI sales. So we were surprised with the fact that with the increased volumes, we have seen 84% increase in number of units, 66% increase in value terms of sales to NRI from the previous year.
66% in 2022 compared to 2021.
Absolutely.
That's a big number, but how is it stacked to, let's say, 2018 and that period before COVID?
So, you know, actually it is, let me put it in another context, right? So our overall business went up, like across the property sector, our overall business went up by over 40%. And in that context, 66% increase has happened in the NRI business. But if you look at percentage terms, as a percentage, we have gone up by 20% of the overall business. So if we were doing, say, about 10-11% of the business, now we're doing 13-14% of the business from the NRI market. So that's as far as the numbers are concerned, and how this reflects in the fact that, you know, you're seeing a lot more NRI demand, and therefore, you know, you see the volumes and value coming in there.
Okay.
And I quite agree with Vikas, consolidation and the brand piece and RERA piece has really played out. The second point you were making on the depreciating rupee and what happens if you want to repatriate. Majority of the buying that happens is really buying that is happening either from the Middle East or many markets where you know, all of these buyers, NRI buyers, know that they are more likely and most likely to come back home, and they want to make investments back home. Okay. And therefore, you know, there's unlikely chance of them taking it away. So, you know, for example, largest market is really the Middle East market, right? Because we know that they won't stay there forever in their life. In all likelihood, they will come back to the country. So, so one piece is that. The second piece, which is again, as an asset, it appreciates a lot more. So if you've invested early in the project at new launch stage, you are seeing 50 to 60% increase in terms of appreciation by the time the project gets completed, GST goes away, and therefore your value becomes much higher. And you have invested early in the project, and therefore that kind of compensates it as well. So, you know, in that sense, I think people do their math, and that's why you're seeing the investment go up.
All right. Well, we've kept Mayur waiting, but I think we will just take a very quick short break because it's important to understand what all can NRIs buy in India and what are the tax implications of their investments. Are they any different from what are the tax implications for Indians buying real estate, and what are some of the things they should be careful of when they buy property in the country? Stay with us. We'll be back in just a jiffy. The World Bank says India is expected to receive a record $100 billion in remittances in 2022, making it the top recipient this year, ahead of Mexico, Philippines, and even China. Now, some of this money is definitely flowing into real estate, as we discussed before the break. Most developers and, of course, aggregators are reporting higher NRI interest and sales in terms of housing units in India. Now let's get some nitty-gritties on what all can NRIs invest in it when it comes to real estate and what are the tax implications. Abhishek Kapoor, Vikas Vadhavan and Mayur Shah with us. Mayur, let me come to you. I know you've been waiting by patiently, but the discussion now moves to your domain area. So, it's not just residential, there's also commercial that NRIs can invest in. Is there any restriction in terms of the number of properties that NRIs can buy and any other things that they must keep in mind and what they can't buy as well?
Sure. So, in terms of buying a property, I don't think there is any restrictions in buying any property for by an NRI, except they cannot buy any agricultural land or farmhouses in India. And in certain states or certain local authorities, the foreign citizen cannot buy any property. Even if they are NRIs, they cannot buy the property. And therefore, one has to be very careful while they are buying. They just need to check the local regulations and see that whether they can buy those properties or not. As far as residential and commercial properties are concerned, there are no restrictions except, one can remit. Once the properties are being sold in India, and if NRI wants to take away the money into the home country, they can take it only up to two residential property, and therefore one has to be very careful. If you are investing in residential property, then up to two residential property you can take entire sales proceed back to the home country. Otherwise, they have to wait, and every year $1 million can be remitted outside India from India, and through that they can keep remitting money outside India. So that is from the buying a property in India and how you can, upon sale, how you can repatriate that outside India.
In terms of taxation, so these are some important points that you've raised, that two properties and more than that, if they buy, they actually cannot repatriate and there's a limitation to repatriating. But in terms of taxation, is the tax treatment exactly the same as Indian citizens buying and selling real estate, or there is a difference in TDS? I think there is some withholding of TDS, isn't it, Mayur?
That's absolutely right. So as far as tax implications are concerned, I think implications remain same as Indian citizen. I don't think there is any difference. The only challenge which is there is that, when any property is sold by any NRI, they are considered to be a non-resident in India. As a result, they have to, the tax has to be deducted on a full consideration or on a capital gain. And how do you determine capital gain? When the buyer is buying, he wouldn't know what will be the capital gain for the seller. As a result, what happens is that either, the NRI has to get a certificate from the tax officer, or has to produce an evidence in terms of what is the capital gain arose to him, and basis which the taxes can be, or TDS or withholding can be done on the same value, and post which he can receive the money, and that is a big challenge. Apart from that, the another challenge which NRI faces is that when they are buying a property, they also require to withhold taxes from the seller. And that's where another challenge arises. They may not have any wherewithal in terms of how to deduct and deposit taxes, because they would be remitting from overseas.
Right.
And that brings another challenge for them from practical standpoint, how do they deal with it. Third thing is that, when they are selling the property, they should have a PAN number, permanent account number. Otherwise, it becomes very difficult for them even to claim that money back, even if they are not subject to tax or they have some tax advantage they want to take, they may not be able to take. And therefore, they have to ensure that, they have a permanent account number for which, you have to give Indian address or, Indian mobile number. And that brings a lot of challenges. Practical challenges are there, which one has to address then. So these are the points. Apart from that, they also need to look at if they want to invest or they want to save any capital gain tax, how they can save, which kind of provisions, whether they can invest in other residential property whereby they are able to take advantage of non-taxation. In that case, withholding will become much more complex, and probably the buyer would insist for a certificate from the tax office. and
Okay.
that is a little bit of challenge.
Challenge.
So
That's why.
these are
People like EY are in business, isn't it? To help them.
that's true.
But Abhishek, very quickly, let me wrap out. I have just 30 seconds left. But I mean, how easy do developers such as you make the process for NRIs buying and selling in India? I mean, is there a special desk, assistance? What is it that you offer?
Yes, definitely. So, from the point of view of guiding our customers, especially the NRI customers, we in fact have a team which is sitting out of Dubai, which runs the entire NRI business, and they are very well aware of these legal compliances and ensuring that the customers have that information in advance. And of course, our CRM is very well equipped to share this information. Plus, the bankers are always involved because most of these NRIs also do take loans. A large number of them do. So they always have a local bank. So there is quite a bit of advice that comes through and that enables them to take the decision and facilitate the process. So yes, we do have a specific set of people who actually deal with the entire NRI customers.
I'm sure Vikas, even housing.com has a special team dedicated to, or at least information available to assist them.
So on the housing side, Manisha, it's a platform where definitely we have curated set of properties which we provide to NRI from a search perspective. But on-ground assistance is provided by our broker partners. And on the PropTiger side, we have a dedicated NRI team who caters to NRI customers and provide that end-to-end service.
All right. In fact, I mean, there's been so much change in India's real estate with regulation coming in, more transparency coming in, and information available. So I don't think it's that challenging. And of course, the rupee is now so much cheaper. So therefore, your dollar buys you so much more. Well, I'm going to wrap out. Vikas Vadhavan, Abhishek Kapoor and Mayur Shah. Gentlemen, thank you very much for joining me today on the show. And that's a wrap from me. Thank you so much.